Yeah, well, perhaps, and you could say that is actually one basket where you can lay some eggs, because if you feel that the global economy is going to grow next year, and it's going to grow probably at the same pace as this year. I don't think it will, but where do we have the vacant capacity when it comes to workers? We really don't to grow the economy, to grow earnings. So we need some kind of enabler, and AI definitely is the one enabler that is first in mind, and for many investors, I think. If we are looking into a 2024 with rate cuts, that as well could be a positive, and at least not a headwind, as we have seen rate increases have been for this type of stocks.
Just looking at returns, and obviously there are other alternatives now. We've been talking about a world where there's been no other alternative for a long time versus the equity market, but bonds have come back in a big way this year. I noticed that you've been charting the European dividend yield versus the 10-year interest rates, and they're not that far apart. What does next year hold in terms of returns? And if you think about positioning here, what is the equity story versus all of the other alternatives now?
Yeah, well, I think that the equity story is deteriorating because of the high pricing of equity compared now to the pricing of bonds. So definitely the equity story is deteriorating compared to alternatives.
Point that's been raised too in some of your charting has been the P 12-month forward for small, mid and large caps. It feels as though there's some convergence taking place. I thought as we got into tighter economic conditions, then the small caps should start to underperform. So what are you seeing in terms of the revaluation around the earnings profile of these small to medium to large companies?
Yeah, well, I think first of all, some of the small caps will be hit much harder by the high interests. Because their debt is not as long term as some of the larger companies. So in that respect, they will probably feel the negatives from the rate increases earlier than some of the larger companies, and in that respect, they will have more headwind. If you find small cap companies, also look for the debt structure and look for which markets they are maneuvering in. Some of the small caps are maybe not quite as global in their reach as the larger companies. So in that respect, I'm not sure that it's going to be a boom year for small cap equities in 2024 either.
So Jakob, just draw all this together for us. For investors are desperately seeking to position for next year, what's your biggest conviction calls?
Yeah, well, I think it's looking more defensive, and that is difficult because we've had an equity market for the last 2 years that has been very intensely focused on movements in interest rates. If we get into a even lower growth path in the Western economies in 2024, maybe a bit of attention will be turned to the earnings side of the equation as well. And that should be a positive for some of the more defensive plays. Pharma companies is definitely one place that I in the beginning of the year see some potential. But it's clear that moving further into the year, and with the U.S. presidential election, there probably will be some talks about pricing of different medicine, and that of course could be a drag when we look further into the year. But otherwise, I would take a defensive call going into 2024.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen, and don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.